Hey, everybody. Welcome to the morning market briefing. It's Monday, January 9th, 2023. Flying solo this morning, Ben and Tom are down at the ICR conference, which is a great conference down in Orlando. This is the first time they're back in person, actually since 2020. Really well done conference. They bring in a lot of publicly traded companies, specifically more on the consumer facing side. So a lot of apparel brands, a lot of shops, a lot of restaurants. Not necessarily the sandbox that we play in the most from a investing standpoint, but it's a great way to get a lot of exposure to what really smart, capable people are seeing on the consumer side of the economy. And so they are down there. We last went in person in 2020. We've done it online the last couple of years. They're back in person. So they're down there. They are there with Jason Sieb, one of our equity analysts. So they will be splitting up across different sections of the ballroom. And basically every 20 to 30 minutes, there will be a new company presenting. And when it's a company presenting, it's not a director of marketing or somebody like that. It's usually the CEO and the CFO. And so there's breakout sessions, time to get questions answered. Should have some really good insights from that. I know we'll incorporate a good bit of that in our macro, but we may also get some updates from them just throughout the week. So they are down there. I will be solo probably today, obviously today, also probably tomorrow and Wednesday. So just bear with us. I know everybody is here for the national championship game preview. We're going to do that at the end of the show, but we're going to open up with just some of the big headlines as this week kicks off. Just to give you a quick pulse on the market, the Dow is up about 28 basis points right now on a futures basis. S&P up about 38, NASDAQ up 47. Gold's up a little bit, silver's up a little bit, oil up about 3%. So we're pretty green right now. Certainly seems like a period of potentially some folks making some risk on trades, but we'll kind of circle back to that and see if that's prudent or not. We did hear from Adobe CEO over the weekend, interviewed by Wall Street Journal. I think what was most interesting in his comments is that he's actually relatively positive on consumer sentiment. He said, I would say the U.S. has demonstrated tremendous resilience overall. People in Europe are perhaps a little bit more concerned about the winter and energy prices and inflation. So interesting to hear that from Adobe, a company that's really had several shockwaves kind of go through their system over the last 12 months. Feels pretty good about the consumer. I think that's going to be a very interesting data point to kind of compare to what we hear from Ben and Tom while they're down at this conference, and Jason Sieb as well. We'll try to get him on the call. But seeing a little bit of confidence there from Adobe CEO. That's not the kind of news that will necessarily move the market, won't even move the stock, but interesting to see some people start to say, hey, we look pretty good and we look a little bit better than Europe. There's a little bit less concern here. So resiliency is certainly a theme. We've talked about that at length on this call. We're relatively surprised by how many companies have just kind of pushed through some of these challenges with inflation and some of the concerns about the employment picture and other items. So things looking relatively good there. Macy's, meanwhile, obviously consumer facing, down 5% pre-market as they lowered their guidance for their fiscal Q4. They think it'll be in the lower half of their range, which they gave at $8.16 billion to $8.4 billion in revenue. They reiterated their earnings per share range of $1.47 to $1.67 per share. They're continuing to try to reduce some of their inventory. The inventory story on the retail stocks has really been one of the bigger stories, I would say, over the last 12 months, maybe the biggest in the retail space, as companies have tried to kind of navigate through that. There was some companies that had so much trouble during COVID getting supplies that they overordered, and they're trying to reduce that still. Macy's still trying to reduce that. They say, based on the current macroeconomic indicators and our proprietary credit card data, we believe the consumer will continue to be pressured in 2023, particularly in the first half. So a very different view than what we heard from Adobe. They do think inventory will be below 2021 levels and down to the mid-teens, down mid-teens levels relative to what it was in 2019, which was before the COVID. Management had previously warned that the slowdown in November was very much a thing. So this is not necessarily a huge surprise to see them downgrade. They are presenting at the conference that Ben, Tom, and Jason are at this morning. So it'd be interesting to hear maybe some commentary either directly from them later this week, or if they send us over some notes, we'll try to work those into the call. So Macy's, Adobe, both saying essentially very, very different things. I mean, it makes me wonder that although both of these companies may be somewhat consumer facing, Adobe is facing a very different type of consumer than Macy's. It's not necessarily surprising, in my opinion, to see a different view from a retailer that has been struggling really for the better part of the last decade. Traditional department stores like Macy's have not had a great run with the rise of e-commerce. So not necessarily shocking that maybe their view of consumer strength is a little bit different than Adobe, who has really ingrained themselves into kind of the technology and product environment that people are very dependent on, whether it's Photoshop or any of their other suites. So interesting there to see kind of the dichotomy of what different companies are seeing. Eurozone did release their unemployment figures for November, came in right at 6.5%. And if that sounds like a boring number, it's because the expectation was 6.5%. The last reading was 6.5%. There was moderate wage growth, but the ECB is bracing itself for more of that to come. One comment says, looking ahead, wage growth over the next few quarters is expected to be very strong compared with historical patterns. This reflects robust labor markets that so far haven't been substantially affected by the slowing of the economy, increases in national minimum wages, and some catch up between wages and high rates of inflation. So in Europe, we've talked a little bit. I mean, I'm surprised domestically about the resilience of the economy, especially when we compare ourselves back to June. But Europe has really been pretty surprising in their ability to claw out. Now, Eurozone gets very interesting because you have so many different economies represented in that figure, and there's certainly a lot of variability in there. But they're saying, hey, we're keeping people employed. We're not seeing a whole lot of change. But because of that, there's going to be pretty significant wage increases coming. They expect another 50 basis point rate hike in February, most likely, potentially one after that, according to President Christine Lagarde. So continued paths for Europe and for the US that are relatively similar, although the timetable maybe is not exactly aligned. I mean, we have seen some lightening on the pressure as it relates to wage increases here domestically, but continuing to see pretty strong employment in both zones. Obviously, Eurozone unemployment higher than here in the US, but it's stable. You know, the last reading was 6.5. The expectation was 6.5, came in at 6.5. We've got oil bouncing up about 3%. So pretty interesting to see that. It was bouncing quite a bit on a futures basis early in the morning, would kind of get these little peaks and these little sell-offs. So many of these rallies were selling off quickly when U.S. traders came in. But right now we're sitting looking at crude oil up about 3.2%. We did see a little bit of a bounce in interest rates after a pretty strong collapse on Friday. Interest rates fell about 15 basis points on Friday. They're up about 4 basis points today. We have big Fed auctions coming up on Wednesday and Thursday, big Treasury auctions, excuse me. So that will be interesting to watch what the general interest is there. So definitely something to keep an eye on. But in general, this does feel like a period in which people are willing to take a little bit of risk. This is kind of a risk-on field of the market. I don't know that I totally agree with the timing of that. As we'll preview here in just a moment, we've got a pretty busy week and some pretty significant data points coming forward. I don't know that this is the week that I would be saying, hey, let's dial up equity exposure, let's reduce fixed income, let's focus a little bit more on growth. But even on futures trading early this morning, we're seeing pretty significant disparity. You know, the Dow, which typically is more conservative, more blue chip equities, the Dow's up 30 basis points, the Nasdaq's up almost 60. So a little bit of separation there, which certainly kind of lends itself to the view that, hey, maybe this is a risk on trading environment, at least for the short term. But this week, we do have big data points. Most notably, we will hear from Jay Powell tomorrow. He's speaking at an event in Sweden. We'll always be interested in his commentary, especially in this environment, as people are trying to determine, hey, where exactly is the U.S. economy and what exactly is the Fed going to do as it relates to continuing to put a buffer onto the inflation piece while not totally jeopardizing the GDP component and the growth component. We will get the CPI report coming out on Thursday. We'll also hear from Jim Bullard, who talks at 11:30. We talked about this, I think, on Friday's call. I was actually pretty encouraged by the tone of his commentary. I thought it was a really solid assessment of where we were last week. So it will be interesting to see if we get more clarity and more succinct prognosis of what the economy is looking like, what interest rates are looking like, employment is looking like, as opposed to just, kind of an opportunity for him to push his own agenda on what he'd like to see from a policy standpoint. So that'll be interesting. We got the Eurozone unemployment rate already today. Friday, we'll get the UK industrial production number. So that's an interesting international number to pay attention to as a read through on how the economy is looking over in England. We'll get the small business optimism index tomorrow morning. So that'll be something to keep an eye on. We always reference that in our quarterly macro calls. It focuses a lot on, how much hiring businesses plan to do, where do they plan to spend money, are they going to spend more on CapEx, all those kind of things. A number of significant bond auctions. Wednesday is a 10-year, Thursday is a 30-year. We'll get recaps from the ICR conference, and we're rolling right into earnings season, starting really in earnest on Friday. We'll hear from United Health, we'll hear from BlackRock, Delta, Bank of America, Wells Fargo, JP Morgan, and Citigroup. So a pretty busy week, which again kind of puts a little bit of pause in my mind on really going hard on the risk on trade. I mean, if you're right on that trade and we get a lot of data points that support that, it could be a very, very good week for you. But I would be a little bit hesitant to make any kind of macro call coming into the new year this early. So it will be interesting to see how that plays out. Tonight, the big economic news is the national championship game, Georgia versus TCU. I think this is an exciting game. I'm pretty pumped about it. I think I'm a Georgia fan. If you can't read my sweatshirt, some would say I'm obsessed, but I'm a pretty big Georgia fan. I think it's going to be a fun game. What I like about this game is I think it's everything that's cool about college football kind of boiled down. As a Georgia fan, it's weird to see that Georgia's now the team that everybody in the country hates. So that's kind of fun. I saw one graphic in which it was like, across state by state, who's everybody cheering for. And Georgia is by and large cheering for Georgia. Every other state is cheering for TCU. So you get kind of this weird imbalance. If TCU wins, it'll be one of the most unlikely national championships in the history of college football. This is a team that was 5-7 last year. They were such an unbelievable long shot to even win their conference. I think in the preseason, the media picked them to finish 7th in the Big 12. And they've just had this absolutely magical run, lots of tight games. They just find ways to win. So if TCU wins, it's going to be historical for a number of reasons. If Georgia wins, it will be historical. They'll be the first team to win back-to-back championships in the playoff era, which is pretty cool. It's pretty wild to think about Georgia going, 40 plus years without a title and now being back up for one. Georgia is favored, I think, by 13.5 points. That's the largest point spread in a national championship game in decades, I believe. Certainly the largest in the college football playoff era. But it's interesting. Jonathan Hicks, super producer, and I were talking before the call. It's interesting if you read stuff and you listen to stuff, it's very much like, well, here's how TCU can win. And I think the media is pretty smart in that they don't say here's why they'll win, but here's how they win. The media definitely wants TCU to win this. It gives them a lot more to write about. There's not a whole lot to write about if Georgia wins a second straight national championship. That's just going to be boring for them. They want clicks. If they can get TCU coverage for the next week, 10 days, 2 weeks, however long, all of a sudden it'll become pretty interesting. And they'll have a lot of data points and a lot of stories to write about people that haven't been all that covered over the last, 3, 4, 5 years. So that could be interesting. Just, trying to see how the fallout is handled for either team winning or losing. Overall, though, I feel good about Georgia. I think TCU is a good team. I don't want to sugarcoat it. I think the 13.5 point spread's a little bit too big. TCU has talent, and I think that's the big thing I keep reminding Georgia fans who are just like, TCU, I haven't watched any football all year. How are they in this game? We should kill them. TCU is very talented. They've got first round type talent at defensive back, first round type talent at wide receiver. They've got some playmakers. They bullied Michigan in a lot of ways, but they don't have the depth that Georgia has. And when you look at Georgia over the last 2.5 years, the only theme you can find in games in which Georgia has, kind of consistently had some hard times is when they're playing supremely talented teams. Last week, Ohio State, very, very difficult game. There's a talent composite that is compiled by 24/7 Sports, which really focuses on who are the recruits that you brought in, who are the transfers, how good are all those guys. Ohio State's the third most talented team in the country. Alabama's first, Georgia's second. So it's not surprising that when you look at the past 2.5 seasons, Georgia's had a tough time with Ohio State, had a tough time with Alabama. They're going nose for nose on the talent department. They're very, very even. Beyond that, when you look at games that Georgia struggled in, I think the Missouri game from this year is really the one that most immediately comes to mind. There's not really a theme there other than just Georgia played really poorly. I do not expect Georgia to play really poorly tonight. It could happen, but I actually felt like Georgia played very, very poorly against Ohio State. And you look at TCU and they're battle tested. It's just interesting, the narrative to me that, when Georgia finds a way to win against Ohio State, the narrative is essentially, well, they should have lost that game. When TCU finds a way to win against any of a number of pretty mediocre opponents, it's very celebratory. They always find a way to win. And so I don't expect back-to-back poor performances from Georgia. A lot of their struggles against Ohio State were self-inflicted, whether it was interceptions or throwing the ball past the line of scrimmage, which is illegal, lapses in coverage. We're not dealing with a receiving core like what Ohio State had. And Georgia just doesn't very often play poorly back-to-back. The Missouri game was 26-22. Georgia needed a late push to win that game. They turned around and beat Auburn by 32 points and then Vanderbilt by 55 the next 2 weeks. I think this Georgia team is going to be ready to play. I don't totally buy into the theory that the game is never over. People are saying, TCU likes to come from behind. They like to play from behind. I think they like that when they're relatively even matched in terms of a talent perspective. But if Georgia gets a lead, I think Georgia's got the depth at offensive line and at running back to really take the air out of the stadium and make it a really boring game. And so I think Georgia's probably not ever out of it, but TCU could be out of it. And that's what I'm rooting for. I'd love to have a fourth quarter in which, it's kind of uneventful. You're not sitting on the edge of your seat. You feel like, hey, this is a comfortable win for the Dogs. They get 2 in a row. So official prediction, I think Georgia wins by 12. Odd score there. I think TCU probably gets a touchdown in the fourth quarter at some point to cover the spread. But I think Georgia wins comfortably and for most of the game is in control. That's the official prediction. We'll wrap it up there and we can talk about how wrong I was about the game tomorrow morning. Hope you guys have a great day. We'll talk to you soon.